Welcome back. Ryan Coyle here, founder and owner of Connect.ca Realty. And I'm here with my expert sales representative, Chris Ham of Connect.ca as well. Today's our November update, and we're going to be looking at the rental numbers for October, as well as the resale numbers for October. And Chris has been, nice enough to put together this beautiful presentation. Chris, if you could walk us through the numbers, I'd love to hear what's going on in the market today.
Yeah, most definitely. We'll start with the rental side of the market. So average transacted condo rents reached a record high of $2,819 in October, which is an increase of 21% annually. Annual rent inflation was its second highest record, behind June 2022, which was 21.9%, increasing from 19.7% annual pace in September of this year. Rents are up 1.2% month over month in October, more than reversing the 0.7% monthly decline that we saw in September of this year.
I just want to comment on that because, the market's starting to act like a regular seasonal market in terms of rents as well as resale. And that's why you typically see a lot of appreciation in the rental market in the summer months leading up to people starting new jobs in the fall. Also, a lot of students coming into the city. But right now we're really looking at, and typically September pulls back as well as October. So what we're really seeing is very tight supply in the rental market. We'll talk about the resale market as well, where there's tight supply as well. But, I think we're going to see typically where maybe rents are going down in the fall season after a real strong bull market. I think we're going to start seeing them go sideways or slightly up, which is what you're showing here. So that's really interesting.
Yeah, I mean, what we're about to talk on with the next point is that supply is going to be even more constrained leading to the later parts of the year. So both lease transactions and new listings continued their seasonal slowdown in October, although new listings declined much faster than leases month over month. So what we're seeing is fewer units being put into the market. There's still very high demand, as we can see from the month over month increase in rental prices. And because there's fewer units being made available, prices are just going to naturally keep on climbing throughout the rest of the year and into next year as well.
Yeah, I expect they will as well. And not only are we talking about seasonality of the rental market on low supply, it's one important thing to note, especially with the market today, is that when we are in a market where interest rates are climbing, and this isn't the first time, this has happened many times over my career, it's a very cyclical interest rate environment here in Canada. Maybe not as fast as this, but it takes buyers out of the market. So there's a demand for buying, which literally moves to the sidelines. It doesn't evaporate. It doesn't go away. It sits there and it waits for rates to either level out or start going down. So there's going to be a tremendous amount of demand, which will come back into the market and increase prices to really, really appreciate a rapid rate, especially in the condo market as they, remain more affordable than the low rise. There's a big price gap there. So, the point of that is that people aren't buying, so they're jumping into the rental market. So as an excellent hedge for real estate investors, especially in downtown urban cores like Toronto, especially Toronto, when the market may go sideways or down, prices for rents are actually going up, and they're going up at a rapid rate. And that's a huge hedge against risk and rising rates. Not only are we seeing prices for rents increasing in downtown urban cores, but we're also seeing them increase in other markets like Hamilton. Hamilton is a very strong market. We've been talking about Hamilton for a really long time, and it's really interesting to see density, meaning condo buildings, start to happen in downtown Hamilton, and it's creating this new type of market, very similar to what we had seen in Toronto in the early 2000s, where that became a condo boom. And maybe comment a bit on Hamilton rents, what you've been seeing, Chris.
Yeah, just like as you touch on, so the rental market in Hamilton is just absolutely ridiculous. From July 2021 to July 2022, rental rates have gone up on average 26% in the downtown core of Hamilton, which is absolutely ridiculous. I mean, you compare that to Toronto, it's increasing by an extra 5% over that time period. So with a market like Hamilton, where the purchase prices are a lot lower compared to what you can get in Toronto, it just simply means that by the time that you get the keys to the property 4, 5, 6 years down the road, you're going to be in a very good cash flow position with the suites. even with the rates they are today, again, based on the purchase price to the sale or to the rental return that you're getting, it just puts you in a very favorable position come day one.
So I typically search for capital appreciation. What you're saying is Hamilton, for those looking for cash flow, Hamilton is a really good market. I've also invested heavily in Hamilton, so I do think it's a capital appreciation market as well.
Oh, 100%. But even when we touch on the capital appreciation side of the market as well, in Hamilton, year over year, they're up 14.9%. So as we're going to touch on shortly with Toronto and GTA, where prices may be down or if not stagnant, that market is one where we're seeing a pretty significant increase from year to year.
Take a look at the resale numbers for October.
Definitely. Let's touch on that right now. Condo resale activity recorded a small 1.9% month over month increase in October. However, at 1338, sale volume is down 54% from last year's record high and 28% below the 20-year average. The ratio of monthly sales to new listings at 41.3% remain near the lower boundary of a balanced market, improving slightly from 37.9% ratio in September. Units transacted at an average of 98.2% of the listing price, representing a 3-month high and aligned with a 20-year average of 98.4%. I think it's significant, that point right there.
Yeah, well, I think all those points are significant. I mean, there's no doubt the market is not what it used to be earlier in the year. But what I think is really important with these stats is that we're seeing sideways growth or some slight upward growth as well. And the really important thing to keep in mind as well, when you're seeing a lot of new listings, I feel very confident owning a lot of real estate in this market because most of those listings are coming back off the market when they're not getting the prices they want. There's no distressed sellers, no panic sellers, which can really cause a problem when a recession hits. But we're not seeing any indication of that in the market, myself, you, or any of the experts. So I think we're moving into a well-balanced market. We're probably going to see some sideways growth, if not slight month-over-month growth. One important thing to note as well, though, is we're looking at GTA numbers for the most part here. And we've identified markets within the market, so sub-markets that are actually seeing a lot of growth right now. So West Bend condos, for example, we just sent out an email that breaks down the growth there. So where the rest of Toronto is going relatively flat, we're seeing 7+% growth in that area as people want to move into an area like that has subway, parks, amenities, lifestyle. And there's really no affordable options because it's predominantly low-rise housing. So there's still really good opportunities for growth in this market.
100%. Last point here. So at 4,623 units, active listings at month end were 11% below their 20-year average and equal to 3.5 months of supply, which is slightly above the 20-year average of 3 months.
Yeah, what's important to note there is I think a seller's market is 4 for condos and 5 months of inventory for houses. Regardless, we're still in a balanced, if not a seller's market. If I misspoke, I mean buyer's market is in that 5 months of inventory range. So we're still in a seller's, if not balanced market right now, which is also a very good sign.
More resale stats here for you. After increasing 2.7% month over month in September due to compositional factors, average condo resale prices declined 2% monthly in October. So I think compositional factors are always need to be taken into account, because if you have a month where you have a lot of higher price inventory selling, obviously your average prices are going to go up. If you have a month where lower price inventory is moving, obviously your average is going to come down. So you kind of really have to look at different segments of the market, different regions to see exactly where the numbers are in that specific area. As you alluded to with West Bend, the numbers are completely different in that area of the market compared to maybe your downtown core or the east side. So it's really key to look into specific markets when looking into purchase price and sale prices. At an average of $716,515, resale condo prices are effectively flat since July, down 11.4% from the March peak, but up 1.8% year over year. 416 average prices have remained unchanged compared to a year ago, whereas 905 averages are up 5.7%.
Yeah, and again, it's an important thing to point out. There's submarkets within there. 416 makes up a lot of markets. The downtown core is seeing tight supply and a lot of growth. Not a lot of growth, but it's seeing some growth. And then, as we mentioned, the High Park area. So there's different areas that is seeing growth in the 416. I think another important thing to point out is that most people would live downtown Toronto, close to work, close to restaurants and a lifestyle, the Leafs, the Raptors, if they could afford it. So that's why you see a lot of price appreciation outside of Toronto. It's an affordability thing, and as 905 prices remain pretty tight with 416 prices. When things start to turn around, I think you're going to see a lot more growth in 416. 416 looks like a deal when you look at the price gap, how narrow it is between 905 and 416.
Most definitely. And again, when you compare these numbers to what we're seeing in Hamilton, I mean, that's a downtown core that's really revitalizing, is becoming very attractive to young people, downsizers, various submarkets.
I've bought a lot of real estate there over the last few years. I've seen that trend. I've seen it. I saw it with Toronto. I did very well investing in the Toronto condo market near the beginning of the boom. And I think we're seeing a lot of those similar trends happening in Hamilton.
Definitely. And just to compare the numbers straight up, I mean, 4.9% year over year increase in downtown Hamilton compared to what we're seeing in 416 and 905. I mean, again, if you're looking for a nice price appreciation, Hamilton is definitely a very good option as well for investors.
I agree. Chris, once again, thank you very much for preparing the numbers for October for our November market update. I look forward to connecting with you again next month.
My pleasure. We'll talk to you soon.